G'day all and welcome to Market Matters direct from the desk, a podcast designed to unearth investment opportunities. Today I'm thrilled to be joined by Geoff Wilson, CEO, Chairman of Wilson Asset Management. As you pound the pavement, Geoff, on your ninth LIC that
ninth.
You're listing, WAM Income Maximiser. Firstly, thanks very much for giving us some time coming in and chatting to us.
Hey, thanks James, and hey, love what you do. Hey, to me, you need people. Investing, we're lucky. We've been born into the investment market. The more people we can get in there, it's just a great experience. Putting your wit against everyone else in the world. In terms of finding little gold nuggets, companies to invest in, and also at the same time helping the economy. So to me, investing is very exciting.
Yeah, I find it fascinating. I mean, you've been doing it for nearly 30 years at WAM, so nearly 3 decades. You're in stockbroking before that. As I said, you've got 8 LICs now, about to list the 9th. I think you've got the 2-unit trusts out there.
Yes. Geez, you've done your homework. Good work.
I do. I prepare for everything, Geoff. You were the mastermind behind Future Generation, which I think is a fantastic idea to LICs that operate on a pro bono basis for charity. So 6 billion nearly in WAM.
Yes.
30 years of experience. I want to, I was just talking to you before off air just around, I've had the uptick of the phone has increased the last couple of weeks. We've obviously had markets that have corrected 10%. We've got some uncertainties around Trump trade policies. There's a bunch of a lot of rhetoric headlines going across screens at the moment. Over the last 30 years, you've obviously seen a lot.
Yes, and I've been in the market for since the early '80s. So
broking before that.
That's right. So that's right. There've been a lot of ups and downs. And the interesting thing is, so what do you do? When you see the Dow's fallen significantly, or the Aussie market's down, what do you do? The first thing, to me, the hardest thing about investing is you've got to work against your emotions, which if you can do that successfully, that's what really, to me, it makes a really good investor. The tough thing about working against your emotions, it means you've got to shut down your emotions, which isn't great for having relationships. So, I don't know, I've probably spent the last 20 or 30 years or 40 years of my life trying to turn the volume up on my emotions.
It's hard to switch off, right, when you go home?
Yeah, it is. And in terms of, in the early days, when I was in the market, and particularly, when I set up Wilson Asset Management, I really focused on, I thought it was timing of the market. Like, hey, here's a great opportunity to buy, because things are cheap. And then, try to buy at the bottom, sell at the top. And then what you realise is your crystal ball isn't clear. You actually don't know exactly when the top of the market is, and you don't know exactly when the bottom of the market is. And you read a lot more and you see what happens over time. And I think there was something I was reading recently. The last 20 years, if in the US, if you missed the best day, that's one day each year for 20 years, then your return would be zero. Make no money over 20 years. If you had the market, your money in the market for that day, for the whole year, including that day, then your return was close to 8 to 10%. So the tough thing is, don't get caught up with the emotions, and like now when there's a bit of volatility in the market, then don't think, oh, whoops, I better go to cash. Because when you feel confident and want to put your money back into the market's probably 20% higher. So, and you've missed those opportunities.
Yeah, I know from our own point of view, we've got a digital advice business that talks to a couple of thousand subscribers every day, and we're talking about staying calm and not getting the one wood out, if you like. So staging into the market, staging out of the market, and trying to put an analytical tilt on people's views of the market. So trying to provide some stability and some certainty amongst what is typically quite an uncertain backdrop in markets. I want to get on to, I think it's really interesting to think about the evolution of a business. You were just talking about the evolution of the way you view markets. So if I think about WAM, and I'm an outsider looking in, so correct me if I'm wrong, but I've seen WAM evolve over many years. So whether that's so internally, so from having a centralised CIO to a bunch of lead portfolio managers to focusing on small and mid caps to then going into large caps, alternative, international, and perhaps as the new WAM Income Maximiser that's getting launched. That's probably another evolution in itself, combining equities and I don't think you've got another
a debt
portfolio with debt in it, hybrids
or bonds,
and so
exactly,
on, and so forth. So that's obviously an evolution in itself. I'll get to the Income Maximiser very shortly, but how do you think about evolution in a business? So from you're a business owner and you've built a very successful business over those 3 decades or thereabouts, how do you think about it in your own business and then thinking about the businesses you're investing in? The key is to evolving well, and the people that don't evolve well go out the back door.
Well, it's interesting. Like we have, so when I set up the business and go back, this is 27, 28 years ago now, I've been, my very first job in the early 80s was in funds management. Then I realised that everyone on the fund management side had sort of personality bypasses, and all the fun was happening on the broking side. So this is 1982. So I moved over to become an analyst on the broking side, and spent a bit of time, quite a bit of time, broking. And when I set up Wilson Asset Management, after I decided to go back to set up, it was really to balance my life out a little bit, because broking, unfortunately, and I'm sure James, it's like you work incredibly hard. It's very demanding, and there's a lot of pressure on you. And so I had a 4-year-old daughter, and to me, I thought it was crazy that I couldn't have breakfast with her and my wife. This is when I just turned 40, so I thought there must be a better way. And so I thought I'd set up a little funds management business, write a book, and go on a couple of boards. And did all that. Now the little fund management business, which I thought, maybe if I get to 200 million, I've sort of made it. Obviously, as you said, 6 billion. So it continued to grow. But in terms of how we invest, sort of taking it, looking at the lens, what are you doing when you're investing in a company? You're backing the individual. So we've got a rating process for picking companies. We try to buy undervalued growth companies and buy them when we can see a catalyst that's going to change the valuation. And we look at their earnings growth, we look at valuation, we look at industry they operate in, but probably most importantly, we look at management. Say if I'm investing in you, in Market Matters, I've already made an assessment of you. You're dynamic. You're dynamic. To me, you're very personable. Like I actually, my quick assessment, and this is, when we're talking before this, is that you would be a very good manager. To me, is when you're investing in listed companies, management is incredibly important, because you trust them to manage the company, the CEO, on your behalf. So
it's bloody hard to run a business. And you need a good person doing it.
100%. And from my perspective is I've tried to work as, like in the very early days, Matthew Kidman joined me, was with me for 13 years. Then Chris Stott was there. Then Matt Help was there. Then Kate Thorley's been CEO for the last 20 years. Katrina Burns has been with us for a decade and a half or something like that. So it's really getting good people. And they say, don't they say, employ smarter people than yourself.
Absolutely.
Getting good people and working with them and trying to allow them, the potential to express what they want to achieve.
So this brings us on to the Income Maximiser, because it is an evolution in what WAM has done in the past.
Yes.
So,
and just quickly to go through that, initially it was just me, and I buying undervalued growth companies and buying them when I see a catalyst change the valuation. I started with $1 million. Half was all the money I had, $500,000, and Reg Grundy put in the other $500,000. Then we sort of grew it. We floated our first listed investment company, WAM Capital, which we raised 20 million, now about $2 billion. So to me, it's been a logical evolution. When we've added, large caps, Matt had a background in large caps. when we added global. Katrina used to work with us, went overseas, came back, was looking at global. And WAM Income Maximiser is a similar evolution because we've got 130 odd thousand investors, and we've had investors for years saying, "Look, can you give me?" We pay, listed investment companies pay dividend twice a year. They say, "Look, can you give me monthly? Have you got a product that gives me monthly income?"
So this brings me on to the next point I wanted to discuss is around knowing your customers in business. So obviously an incredibly important principle. I'm interested to, get a sense of, is it a reflection, the fact that you're doing a blended asset approach? Is it an evolution of the customers wanting different things, the investors in their stage of life, perhaps wanting less volatility, perhaps wanting more certainty in terms of outcomes, and you can get that by having a multi-asset approach that includes fixed income and equities as well.
Definitely. Like our of our investors, probably the average age it'd be 68 to 70. So I think 65% of our investors we think are self-managed super funds. So that income and franked income is incredibly important. For years, people have been asking for this product. We actually, 4 years ago, of course, you're always looking at various products, but 4 years ago, I think we had a name. It was called, Project Eagle or something like that. Then you've got to have the capabilities. So latter part of last year, we've added a few more people, and now we've really got some good capabilities to manage the debt. Obviously, we've got the equity capabilities, but also to manage the debt side. And we did a survey of our shareholders latter part of last year, and we asked them how many would be interested in a monthly income product. Now, if they came back, and only 1% said they're interested, then we probably wouldn't be talking today. But 63% of them said that they were interested in a monthly income product. And as you said, by putting the equities, with the bonds, then the volatility, so I think the market volatility, last year was about, the Australian equity market about 15%. And this combination, because we've been running the sort of the paper portfolio, is about 8.8%. So nearly half the volatility. And also another thing is, with our listed investment companies, we've got the flow through yield isn't that great. So we've actually got to make capital to pay out the high dividends that we pay out. Where with this product, pretty much 100% of the dividend that we're talking about paying is covered by fully franked dividends or franked dividends and income that comes in from the bonds and the equity.
And bonds are unfranked, so their distributions are unfranked. You've obviously got some hybrid exposure in there, or you may have some hybrid
we can
exposure.
Until it disappears.
Yeah, exactly right.
Yeah.
So obviously
Correct.
the timing is quite good for an income-focused product insofar as we've got $43 billion worth of hybrid securities, which from 2027 to 32 will be wound up thanks to APRA's ruling.
Which is shocking.
I've been a big fan of the hybrid market for a long time. I think there's been a lot of misconceptions in the hybrid market for quite a long time, but it's proven to be a really strong asset class. And also, it's gotten more favourable the more favourable the bank's capital structures have become. And they've only improved their capital structures over the last 10 years.
And the banks, we've seen, you can go through, you can nearly go under. Like during the GFC, we saw how difficult it was. But they will get, the government won't let them go under. So you've nearly got a government guarantee on the hybrid, which we put a submission into APRA when they were talking about, we thought it was ridiculous they were getting rid of them. But,
In terms of the structure of the portfolio, so it's generally, is it a target asset allocation of 60% Aussie equities, 40% into fixed income and fixed income style investments? Does that go up and down if market conditions change? And how much leeway have you got in terms of that asset allocation?
Probably like all investing, you want maximum flexibility. So, the guys can go 100% equities, 100% fixed interest if they want. Will they? Probably not. At the moment, in the paper portfolio, they're about 50% equities and 50% fixed interest debt. And that's just because of the volatility at the moment. There's a bit of like adjustment that's occurring I think globally, driven by the US, where everyone was looking at, a sort of a resetting of growth expectations. So, we don't think it's, we don't think it's going to be a disaster. We just think it's, that resetting and obviously, Trump's the one that's causing significant uncertainty, and there are the deregulation and the tax cuts. Everyone knew what his plan was. It's just he's doing the painful parts first.
That's how I've described it as well. And I'm glad you came back to that, because you did skirt around the answer around your view on markets in the short term.
Yes.
Earlier on. So we've had a 10% correction. We've obviously got a pretty pivotal week this week with the rollout of additional tariffs. And I think one of the things that markets hate uncertainty. So therefore, the other side of that coin is a bit of uncertainty can actually be a positive for markets, no matter what that certainty is. How are you looking for the remainder of this year? So obviously,
next couple of months.
Yeah.
With that,
give me a short term.
It's going to be tough. Yeah. Next couple of months, because it's really that resetting of growth expectations. And inflation, will the market be higher in 12 months' time? I'd say yes.
Yep.
Because once that's settled down, then, as you said, you've removed significant uncertainty. It's like we're getting our medicine.
Yeah.
But on the other side, from Trump's perspective, there's the deregulation, and once the market sort of adjusts for the for what's happening, for the growth expectations, which are going to be reduced, and for the inflation expectations, which are going to be increased, then once that's adjusted for, that uncertainty's been removed. So it's obviously, I think then you've got a less volatile position to come from. And the interesting thing is, just talking to Matt and Damien, who are running the portfolio, we had a meeting just earlier before this, talking through it. And they were saying the interesting thing is, the equity market sold off, but the bond market's virtually nothing's changed.
That brings a good point in, because I think I rewind the tape to when Trump had his first term, and one of the things he really focused on was the level of the S&P, or the trend in the US market, as a yardstick of how well he was doing. But this time he changed the language around that, highlighting the US 10-year bond yield as a guide of how well he's doing. And I think it's really important.
He's just a shocker, isn't he?
I understand the economic rationale for the focus on 10-year bonds more so than I do from the S&P 500.
Yes.
I think that it is really important that they contain interest rates so that they can have the ability to go and roll out these pro-growth policies. As you said, and I think you're absolutely right in terms of we're at the pain point now where focusing on cutting funds out of the bureaucracy, costs out of the bureaucracy, and focusing on tariffs and the like. So they're negative things, and then we move into the sugar hit for markets, which are deregulation, lower taxes, and so on and so forth. But they need to be really careful of maintaining interest rates that don't get out of control. So the 10-year bond yield is incredibly important for them.
Yes.
I want to move on to communication. So it strikes me whenever we meet the WAM team, we have the portfolio managers in here regularly talking about their views on markets. Whenever I've seen you communicating with investors, I was with a client on Friday who would get a call from you every 6 months.
Haven't I called them recently?
For the there could be a few reasons for that, but
they're not a client anymore.
Who would value a phone call from you? And I know obviously your business has grown.
Yes,
you've got a lot more investors, but it's struck me from the outset, and that you're a very clear communicator. You communicate with clarity, using straightforward articulation of your views, and that has also been the case with some of the PMs that we often talk to. I think it's a really strong way to communicate to investors, and I think it speaks to one of the reasons why one of the downsides of a listed investment company can be big discounts to net asset values.
Yes.
And I mean, it's phenomenal that WAM has traditionally been able to
trade at premiums.
I don't understand that.
No,
it speaks to your ability to take investors along for the ride.
Well, it's pretty simple. Like in theory, well, I'll say it's very simple. How do you get an LIC to trade at NTA? It's very simple to say, very hard to do. And the simple part, like it is supply demand. It's a market. So, if you have more buyers and sellers, then it'll trade at NTA. And so that's the easy part. The hard part is you really have to communicate. But probably if you take a step back, I suppose it's philosophically. So why communicate the way I do communicate? And it's I would say when I was working on the broking side, I was working for them Potter Partners, which then became UBS, and I was working in London, and there was a guy who's running the US operations of Potters, Kevin Crotty, who's now up there. So and it was incredible how he operated. So he was a broker, and we all know, and this is institutional broking, which is highly competitive internally. You're punching each other up, and externally highly competitive. He would go out with other competing brokers, and he'd freely communicate, talk about his clients. And I just thought how refreshing, rather than holding everything in, and sort of being, I'm not going to tell anyone anything that I'm doing. To me, I just thought, what a refreshing way to communicate with people. Don't have to hide your secrets. Just communicate openly, and I mean all these things. You learn little things. You learn things along the way from observing and seeing, and then you read Sam Walton's book, The Walton Way, and he used to get all his service providers, get them all together. They're all competitors, and sort of have them decide to talk together. And I remember when I started Wilson Asset Management, in those days the broking panel was big. And everyone wanted to be on the AMP because they were the biggest commission giver, their broking panel. And so I was a little fund manager. So we'd have we used to have, every 6 months I'd have a little panel review, but it would be, I'd get all the brokers to lunch and we'd talk about it, and it was very open.
Transparent process.
Yeah, that's right. And so it's a lot easier to me in life if you just communicate sort of openly and freely. And I'm happy, like in terms of in the listed investment company space, I'll sit down with anyone and I'll help any other LIC in terms of tell them what they need to do to get them to trade at NTA, if not a premium.
What I'm interested, I believe you went and saw Bill Ackman over in the US, and Bill, for those who don't know, runs a large hedge fund and runs an LIC, Pershing Square. They manage about $20 billion.
Yes.
I've actually got a whole Pershing Square as part of our international equities strategy.
It's cheap. It's cheap, isn't it?
Well, this is the thing. I mean, Bill, there's a few.
Yes.
There's very mixed views on Bill, and I can understand why it trades at a discount, but it's a 30% discount.
Yes.
I mean, what advice did you give to
when I saw Bill?
Bill? I've invited Bill on this. On this.
Perfect.
He's yet to come back to me.
Well, have you tweeted? Have you tweeted that? You tweeted him?
I haven't. No.
Yeah, tweet him.
There you go.
No, only because there was something he tweeted recently, and Nick Kyrgios or something like that said, "Hey, okay, Bill, let's do doubles somewhere." And so now there's. Yeah, he hadn't met him before, and now somehow they're going to play. He likes tennis, obviously. Yeah, going to play doubles somewhere.
So he's got a big LIC, 20. It's trading at a reasonable discant.
Yeah, big discount.
It's a bit of a different structure and
no, but to me, see, I think, and am I giving Bill Bill advice?
Go on, give Bill advice.
Is that again? It is that. He has to significantly improve his communication to his shareholders. That's what he needs to do. Yeah, just as you said, you're talking about one of your shareholders that on a regular basis, we try to ring our shareholders every 6 months. They're part owners of the business. We can only do what we do because they let us do what we do. So you got to communicate with them. And probably the reason I'm on Twitter, I'm not a social media. I'm not big on social media. I think I might have been an early adapter for Facebook because I was doing this course and someone said, "Oh, you've got to join Facebook." I think I've got 30 friends. Yeah, I've never sort of progressed.
Surely you'd have more than
No,
that.
but I don't use it. Yeah, I don't use it. And then when I saw Bill, sort of March last year, he was just saying, "Hey, you got to tweet." Yeah, what has he got? 1.4 million followers.
He does. He's got a big user base. And he was trying to raise $25 billion for
I said to him,
LIC. That's a big big
I said to him, how are you going to raise it?
Yeah.
And he said, tweet.
Yeah, but obviously he didn't get to that.
Yeah,
didn't get to that number.
That's right. But he was telling me that, and I said, "Well, how much time does it take?" And he said, "Hey, surprisingly little." And then I met a few other people over there, and in the activist area, most of the traditional people can neutralise an activist by using the traditional media and by using lawyers, and because they can each sort of get reasonably high quality of both. But some of the targets I spoke to when I was over there, and they were saying, but what we can't combat is social media. So I'd had a Twitter account for years. I'd never used it. So in March last year, I started tweeting. Started with when I had one follower, I got excited.
Yep.
I'm up to 4,000 odd followers now, 4,100 I think. But to me, it's you do get information quickly. And I think the error that Bill made was that he's got, I'm not sure, so he's probably got 100,000 shareholders. What is his communication strategy with those shareholders? Because I went over there back, when Pershing Square was having a bit of a tough time.
Yep.
It was at Elliott, I think, it bought a position in the closed-end fund and were giving him a hard time.
Yep.
Bill wasn't seeing anyone because I did a company visit on Pershing Square because it's cheap. And actually we own – WAM Global owns shares in Pershing Square, and they've owned them pretty much since because A, they perform well, and B, they're cheap.
Yeah.
And if they can, bring the the share price to
NTA, got a renewed
NTA,
focus on doing that. Big buybacks in place and all of that, but
they have to, but the problem there, Bill sort of said, "Hey, I'm going to focus on just investing the money," and which is great. So get back on track and perform. But now, he should be on your show.
But it's hard to raise money at NAV when you've got a listed vehicle out there that's trading at a
100%.
discount to NAV.
Yeah, and with ours, we've got of the 8, 5 of them are trading at NTA or premiums. It's a function of how much effort you put in, what of course results you get out. Like WAM Research, which was the longest LIC of our LICs, it took us the longest to get it to trade at NTA. It took us 7 years. You wouldn't believe this, but 2 years ago, it was trading at a 50% plus premium. Now, why did it get to that type of premium is because, unfortunately, we'd done too good a job.
Yeah.
So we'd rusted all the shareholders on and no one would sell. Even I pretty much, I think I sold nearly all of mine at a 20% premium. I thought it was ridiculous at a 20% premium. But again, in LIC, it's supply-demand.
So just coming back to the WAM Income Maximiser,
yes.
It's open for investment, or it opens next week?
No, it's open. It's open at the moment. It closes. I think you guys have got till the end of next week to get your bids in. It actually closes to the public on the 11th of April, and then lists on the 30th of April. And one of the good things is, because the market's volatile, then you'll have no hot money in it. And it's interesting, the other income type products that are listed, Plato have got one, and more recently Whitefields did one. They're trading at I think Whitefields 10% premium, and which is just a few months ago, and the Plato one's a 20% premium. It's something ridiculous. Now I'm not. Hey, don't invest expecting it to trade anywhere except at NTA, because I don't want people to get the wrong expectations. But what I think is one of the good things about us doing it now is as you said, the market's 10% cheaper. So we're investing cheaper, and we think it'll be good volatility around the time that we've got the money to invest. But there won't be the hot money in the IPO, which we know the hot money goes in and then just don't want to get out on day one. So
it comes out.
Only the believers. So if you've got anyone as a believer, invest. If they want monthly income, a growing stream of franked monthly income, investing in high quality, probably the top 300, growth, dividend income paying equities, and also, we're going for high quality debt and bonds as well.
I think the strategy makes total sense.
Yeah.
So, Geoff, it's been a real pleasure having you in today. I was really excited to chat with you.
Thank you, James.
Thanks very much for giving us your time, joining us today, and I wish you every success with WAM Income Maximiser. No doubt it will be another a great addition to the WAM stable.
Thank you very much. Thanks, James.